Micron Technology had a fantastic day with the stock up over 14% after reporting fantastic earnings fueled by AI. But Micron wasn't the only semiconductor stock to go up today, and we're going to learn what fueled those other chip stocks. Talking about memory, don't you remember how we just did a video on Micron a few days ago explaining all its bullish thesis? Well, if you don't remember, it's probably because you are new here and have yet to hit that thumbs up and subscribe button, so make sure you get to it. All jokes aside, in today's episode, we will do the following. First, take a closer look at what Micron said about the AI market. Next, we're going to look at why various semiconductor stocks went up. And finally, my overall thoughts. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the great thing about Micron Technology is the memory space is pretty much in every single sector in the world dealing with technology. And obviously, this could be a great segue or kind of a great overview of how the semiconductor market is doing. For those that follow me, you guys know I'm big into the AI space, and right now the AI space companies like Nvidia are pretty much fueled by the data center market. So that's where I'm really going to focus my energy today. And we can see in the data center market, Micron says that demand for data center customers continues to be strong and customer inventory levels are healthy. So that's great to hear, because one of the big fears right now might be an over inventory issue happening in the data center market. At least where we're standing right now, Micron believes that's not the case. Not only that, they do believe that the data center market server unit shipments are expected to grow in the mid to high single digits in calendar year 2024, driven by strong growth for AI servers. And they also expect the HBM, which is high bandwidth memory, a type of memory that's used on AI chips, total addressable market to grow from approximately $4 billion in calendar year of 2023 to over $25 billion in calendar year of 2025. In all honesty, I wish they would have shared what was the total addressable market in 2024 so we can kind of see that growth progression. But we can see from 2023 to 2025, that is some insane growth, and obviously bodes really well for the AI chip market, because if you're seeing more addressable market for the HBM, it means you're seeing more kind of AI chips in general. So everything we're hearing right now is very positive for the AI space. So talking about the GPU and AI market, there was a great question during the earnings call by an analyst, and he kind of pretty much mentions, hey, look, now that your AI GPU customers are moving at a 1-year cadence, and that's kind of reflecting how AMD and Nvidia, they used to kind of have a 2-year cadence. Now they're pushing of releasing a new AI chip on a yearly basis. It's kind of forcing the memory companies to also move in that 1-year cadence. And how do they see this in kind of the overall market? Is this helpful for companies like Micron? The second thing is, does this affect the yield issues for some of these chips? Because obviously, when you're creating a new technology, the beginning of that technology tends to have lower yields, and you kind of get better yields as you improve your manufacturing process. But if you're moving your cadence at such a fast levels, what is that going to do with yields? So the CEO did mention the following, that, hey, look, in forms of HBM3E, the 8 high and 12 high, they are seeing great movements and they are happy with their overall yield. And I think this is going to be the case with a lot of the companies. Obviously, yields might not be the same as your typical memory market back then, but they'll most likely be able to transfer the cost here to the customers, right? Nvidia, they're selling their AI chips at crazy values. So obviously, if yields are lower, I'm going to expect Micron to be able to sell some of their memory solutions to Nvidia at a higher value than normal. Nothing too crazy, but it will be at least able to kind of help with these lower yields in general. Now, the second thing that the CEO mentions, that at the end of the day, a yearly cadence is only good for those that have the best technology and best manufacturing mode. So not only does it help fight competition, but if you are the best in this market, you're gonna be able to win big. And right now, there are 3 players in the memory market that are focusing on HBM: SK Hynix, Micron, and Samsung. At the moment, Samsung is pretty lagging here in the HBM3 market. So this is kind of a shot to Samsung, saying, hey, look, if Samsung can't keep up at the end of the day, even though this might be a three player market, it might just end up being a two-player market between Micron and SK Hynix. Now, Micron also mentioned that their HBM3E 12 high stack is actually doing better than the previous generation or previous iteration of their competitors. So we can see that Micron is very, very confident in their technology, and they believe this yearly cadence is going to be able to create a stronger moat in the memory space. So overall, everything in my opinion that we're hearing is bullish for the AI space, and we can definitely see how Micron is also seeing itself as a strong player in this market. Now, this is obviously bullish, and I think this is why we might have had an earlier bullish trend on companies like Nvidia, which were up to 127. We can see AMD was also up roughly 3.3%. I think overall the AI chip market is still pretty healthy. Now, outside the AI chip market, there were another industry within the semiconductor space that was up a nice amount. And that was like companies that deal with the semiconductor equipment space. Applied Material was up roughly 6%. Lam Research was up 5.4%. CAMT was up 12%. All these are companies that deal in the semiconductor equipment space. And some of you might be wondering, Jose, what is really driving the semiconductor equipment to be up? Now, before we go any further, I do want to say, hey, look, Lam Research was a company we discussed here earlier this month that I believe was sitting at attractive levels. And I'm happy I did that video. We did Lam Research, we did AMT, and I actually forgot the third company, but there were three companies that I believe were sitting at attractive levels. And right now, based on the current market, I'm happy I presented that video to my viewers. So let's get started to see what's happening here in the semiconductor equipment space. So again, it comes back to Micron. So Micron mentions that they expect their fiscal year 2025 Capex to be meaningfully higher and at around mid 30% range of revenue based on their current Capex and revenue expectations. Now, total revenue estimates for this year for Micron is expected to be roughly $38 billion. Now, 35% of $38 billion is roughly $13.3 billion. That is a huge growth compared to the peak. The peak for Capex was 2022 when a lot of companies were investing a lot. And we can see it didn't touch $12.5 billion. So this would be a big year growth in forms of Capex. So obviously a lot of the semiconductor equipment stocks got very, very excited. Another thing is obviously if Micron is doing this is going to most likely be the case for other semiconductor manufacturer players. Because for those that are not familiar, while Micron is a chip designer, they design the memory space, they also have a lot of manufacturing capabilities where they manufacture their memory solutions. So based on this is expected that maybe SK Hynix, that may be Samsung, that may be TSMC, which is this overall chip manufacturing. All these other players are also going to raise their Capex. So it seems like a very, very bullish sign for the semiconductor equipment space. Before we go any further, if you want to learn about the semiconductor market, I do have pre-orders open for my Q3 earnings book. For those that are not familiar, I had a Q2 earnings book that just finished, and obviously with earnings season starting back up, we're dropping the new book right now. And this is one that gets updated on a weekly basis with new earnings. Once you purchase the book, you get automatic updates for free. Now, the great thing here is if you are a purchaser of my Q2, I did send you a 50% coupon off. But for those that are new, I also have an offer for you. If you purchase this book and want Q2 for free, just use code YouTube Q3. It is in my pinned comment, as earnings are starting pretty soon, and this, in my opinion, is going to be a great way to stay ahead of the curve. Now, continuing to talk here about Capex, another kind of example, we did get reports from Semi, which is this huge semiconductor research firm, that the semiconductor equipment market is expected to grow. In 2024, is expected to grow by roughly 4% to 99.3 billion, and in 2025 is expected to grow 24% to 123 billion, surpassing $100 billion level for the first time. And then 2026 is going to continue to grow, followed by 2027. So right now, I personally believe a great time to purchase some semiconductor equipment players. and just hold them for a nice foreseeable future. So that's all the main information on this episode, not just share my overall thoughts. I think what Micron mentioned and every kind of other news we've been discussing in the AI chip market is still very bullish for Nvidia and the AI space. Like I mentioned, these are levels for Nvidia that I personally wouldn't purchase big amounts. If I was, it would be small dollar cost average, but I believe the market gives us better opportunities. It has just less than a month ago and less than 2 months ago when the stock was kind of sitting in the low 100s. And I definitely made plenty of videos saying that that's where I found it pretty attractive. Now for me, it's time to be patient. The other thing is we did hear from this great Capex move that semiconductor equipment plays are in a great move for at least the next few years if things stay in line. So I'm happy to own a few semiconductor equipment companies. Normally I go with the smaller base, something like CAMT, which has a market cap less than $10 billion. There's a few others that I own, and I think if looking at semiconductor equipment, that might be the best place when looking at growth style. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.